Central banks are selling gold, currencies are under pressure, and global debt is exploding past 100 trillion. So the big question is this the end of the gold and silver bull market? Or is something much bigger just getting started? Because what's happening right now looks a lot like 2008, but with one critical difference. Lately, a lot of people are pointing to countries like Turkey selling gold and asking the same thing. If central banks are dumping gold, doesn't that mean the bull run is over? It sounds logical. But the reality is actually the opposite. These countries aren't selling gold because it's weak. They're selling it because they're in trouble. They're using gold to support their collapsing currencies, to create demand for their local money, and to stabilize their economies. In simple terms, gold isn't failing. It's being used as financial emergency fuel. And that tells us two very important things. Number one, gold is not just a store of value. It's also a source of liquidity when everything else breaks. And number two, the real crisis this time isn't private banks like in 2008. It's governments. Back then, central banks printed money to save the system. Today, the ones printing the money are the ones under pressure. That's a completely different game. We're now dealing with a global system where sovereign debt has spiraled out of control. And when countries start selling assets like gold and even dumping bonds just to survive, that's not stability, that's stress. In fact, what we're seeing right now is the early stage of a much larger shift. Money moving away from traditional assets and looking for safety somewhere else. And historically, when that happens, there are only a few places it goes. Think back to 2008. Gold didn't just go straight up. It actually corrected sharply during the panic. But after that, it exploded. Because once the system stabilized, investors realized something important. Paper assets can fail, but real assets hold value. And that's exactly the setup we're seeing again today. Right now, commodities as a whole are waking up. For years, financial assets have been undervalued compared to stocks, but that's changing now. Money is slowly rotating out of overvalued markets and into real assets, things like energy, metals, and raw materials. This shift didn't start because of short-term news. It started because the system underneath is starting to crack. Now, here's where it gets really interesting. Gold is already moving, but silver is still massively underpriced historically. If you look at past cycles, silver doesn't just follow gold, it outperforms it by a lot. And when silver moves, it doesn't move slowly, it moves fast, violently. It often catches people completely off guard. At the same time, the stock market is showing signs of topping out. And if that trend continues, we could see a major shift in capital flows. Because when confidence in financial assets drops, investors don't just sit in cash, they move into something real. But here's the problem. This time, even bonds, traditionally a safe haven, are under pressure. So where does the money go? That leaves one major category, real money. And this is where things could accelerate quickly. If central banks respond the only way they know how, by printing more money, then the value of currencies continues to fall. Not just one currency, all of them. And when that happens, people don't measure wealth in dollars anymore, they measure it in assets. That's when gold and silver enter their most explosive phase. So no, central banks selling gold is not the end of the bull market, it's a signal that stress is building in the system. And historically, that's exactly when the biggest moves begin. If you want to stay ahead of what's coming next in gold, silver, and the global financial system, make sure you subscribe. Because the next phase of this cycle could move faster than most people expect. And you don't want to be late?